Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your boys Bertha, Hurt, and Lanny, the best dividend champions of the world, and we're here on YouTube, guys. We are rocking out. Cheers to your Thursday. Hopefully, you're having a solid week here, guys. We're going to focus on one dividend high growth stock right now with the yield that's actually swelled up to over 3.75%. And this is going to be kind of interesting because we're not talking about banking. We're not talking about some of the other big names that you hear in the industry either. So we'd be curious to see Bird's take, my take, and your take, Jack.
I know all you subscribers are sitting there like, thank God they are not going to talk about banks in this video. Thank goodness. So before we do it, everyone, subscribe to the channel, give the video a thumbs up, follow us on all of our social media channels. They're all linked down there below. We're all trying to reach financial freedom together by finding and buying these undervalued dividend growth stocks. This one's going to be a lot of fun because this company, the metrics are looking pretty solid, and we're going to explain them to you as we go through it. So buckle up, get your coffee, get your water, get your beer. Who cares? Get whatever the heck you want to and listen to us talk about a stock.
Exactly, guys. All right, let's buckle in. The S&P 500 at the time of this video is up just over 15%, trading at a PE ratio on the S&P 500 at about 25 times earnings. And there are a few industries that have gotten punished pretty bad. You got your energy utilities industry, obviously banking. Bird's
Obviously.
banking. Bird loves banking. We all love banking. I love banking too, baby. But pharmaceuticals and healthcare. Don't worry, we're not talking about Pfizer. We're not talking about AbbVie. We're not talking about CVS. We're not talking about Walgreens. No, 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 no. Don't you worry, Jack. We are going into a company that we've actually never talked about on this channel. I don't think anybody has really put too many videos out either on this dividend stock. But man, I think it is time to bring it to the table because I think there's a lot of investors out there that would be very interested in possibly looking at this over 100 billion by market cap company.
Oh, this small under the radar $100 billion market cap company. Ooh, this one's going to be fun, especially because the yield is pretty solid on this one too. The yield is looking strong, and it's not a small company, small player either. Lanny, you want to do the big reveal for this company?
Sure. And, guys, correct us in the comments if we get the name wrong as well, since again, it's not talked about as much. But Amgen or Amgen, ticker symbol AMGN, this stock is down 16% this year, as well with the rest of the industry. And the interesting part is the dividend growth behind this company as well as the current dividend stock metrics. And they're really putting up a good fight against some of the big pharmas with Pfizer, again, AbbVie, Eli, Bristol, you name it.
Yeah, it's great. And I mean, the beauty about the pharmaceutical drugs is the sector too is look what's happening in the United States, look what's happening worldwide. More people, aging population, larger medications, larger prescriptions. It's just the math adds up to potential cash cows for these companies because once you get that drug approved, there's a ton of R&D expenses. There's a lot that goes into it. Once it gets approved, you have that window before you're allowed to where you can just rake in the money before the generics can come in too. So there's this period, and that's what you see with AbbVie. Humira, when Humira was just exclusively theirs, it was great. Now they're struggling to figure out how to replace it, that the generics are coming in. So that's where Amgen can really benefit, especially when you look at the sales figures for some of their top drugs.
Yeah, I think some of their top drugs you have to do with rheumatoid arthritis, bone cancer, unfortunately, some chemotherapy, and psoriasis. I think, between the four back from a couple of years ago, I want to say, when you add up all those sales, you're talking over 10, 12, 13 billion in total. I think the rheumatoid, what is it, Enbrel? Is that how you pronounce that? And, has, pretty much over 5 billion in sales. And then you've got a couple that are well over 2 billion.
I'm smiling because my wife's in the medical, and we always had this game of me trying to pronounce all of the drugs, and I can never get them right, and she just makes fun of me and just looks at me like I'm a moron. So I'm not even going to attempt here because I don't do well in this. But
That's fair. But as
we'll
you
let the
said,
chart
Bert,
speak. We'll let the chart speak for itself. So all right, so that's the thing. They have these cash cows, but the bigger question is, With all this, what are the company's stock metrics looking like? And to do that, we run them through the dividend diplomats, dividend stock screener, which features three metrics here: PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends. Oh, wait a second. We forgot that bonus metric, the dividend yield. So we technically look at four, but we don't look at that fourth one until the first three are evaluated, because you don't base your decision on yield, but it definitely gets factored into the conversation.
So guys, let's get into the metrics here for Amgen. Ticker symbol again is AMGN. They are trading over $200 a share. They're at $218.65. But again, that's just the stock price. You really want to think about it from the metrics. And you can usually, heck, I'm on Ally Investing right now. You can't buy partial shares. But if you're on Fidelity, SoFi, Robinhood, all your other platforms, you can buy partial shares. So look at it from that standpoint. But forward earnings right now is 17.79. And guys, that's a PE ratio of just over 12, where I think Pfizer's maybe around the 11. I think AbbVie's kind of around that 11 to
Yeah.
13 as well. So again, you're kind of looking at, okay, this stock is right there with the other guys.
Yeah, so let's look at the dividend. Their annual dividend's $8.52.
Ooh,
That gives you a payout ratio that is so perfect of 47.5%.
ooh, sweet.
Yeah, that's nothing more to say to that. Right in our sweet spot, that 40 to 60 cent perfect payout ratio range. Laney, why don't you hit them with the dividend of growth, brother?
Oh, you want me to hit them with the dividend growth, Jack? Well, guys, they've been doing it for 11 plus years. And no, it hasn't been a 2% increase like Pfizer's been doing lately. No, it hasn't been a slowing dividend increase like AbbVie's been doing lately. In fact, their last increase was 9.8% for Amgen, and they've been increasing the dividend at 10.51%, so still in line with that 5-year dividend growth average.
Beautiful. And that's going to look even better when we tell you the dividend yield. Their dividend yield is 3.90%. So almost 4%, well above the S&P 500. So let's look at that factor, the dividend growth factor here. Yield 3.9%, 5-year average dividend growth rate 10.51%. That is beautiful, everybody.
That's a good 1-2 punch, guys. We look at that dividend factor, so that's growth plus yield, and obviously you're getting that over 14% total there. Obviously, things can change in the future, as we know with healthcare. I mean, again, AbbVie was skyrocketing their dividend, now is slowing. Pfizer kind of was similar, but now they're just like kind of pedaling along. So again, things can change very fast in this industry, especially the direction of where prescriptions go, where drugs go. Obviously, I know Amazon and other big players are still trying to figure stuff out there with some of the generic items. So again, things can change, and they do change within the industry. But with all the cash, with all the cash flow, that's why they research and develop new items constantly.
Yeah, and that's why you don't pay out a heavy percent of your income, because you need to have that cash to continue fueling the research and fueling the pipeline. So 47% is actually perfect for the sector.
Yeah. So in summary, guys, a 12 PE, Bert just said it, 47-48% dividend payout ratio, 11 years of growing dividends at over 10%, with now a current dividend yield that's approaching 4% at 3.90%, which compares very well to that 5-year dividend yield average, almost a full percent higher, which was at 2.97%. So definitely showing some value there. Again, down 16% this year, down 12% since last July. Question is this stock on your guys' radar right now? Currently, it is on mine. I'm just evaluating all my healthcare stocks right now. I have a huge position in Pfizer and in AbbVie. So again, this one is on the radar for me. What about you, Bert?
Earned a spot on the watch list. The metrics speak for themselves. It'd be stupid not to put them on your watch list. That doesn't mean I'm buying. Doesn't mean I'm not buying. Just it's good to monitor. It's a great stock. The values are screaming to be added on our watch list. So why not? Why the heck not? You can't ever have too many stocks on your watch list, especially when you're trying to reach financial freedom.
Yeah, so what do you guys think of Amgen? Do you guys like the valuation metrics where they currently are? Are you waiting for that yield eclipse 4% like some people might be? Do you currently even own this dividend stock? And how has your experience been owning this stock over the course of the last few years? Let us know in the comments below. Also, let us know what other healthcare or other stocks you're buying right now.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And just remember, If you're not with us, you're against us, so get out.
Guys, that was Bert and Lanny again from the Dividend Diplomats, over and out.